Good morning, everyone, and welcome to Openpay's special investor briefing to discuss the proposed acquisition of Payment Assist, which was announced to the ASX this morning. My name's Jane Lowe, and I'm the Managing Director of IR Department, and I'm pleased to be your host for today's session. So presenting will be Group CEO and Managing Director Michael Eidel and Group CFO Jussi Nunes. Michael and Jussi will talk to the presentation that was lodged with the ASX this morning and is also available from the Openpay website at openpay.com.au. The formal part of this session will be followed by Q&A. If you'd like to ask a question, you can do so at any time by entering your question into the Q&A function in the Zoom ribbon at the bottom of your screen. So with that, I'd now like to hand over to CEO Michael Eidel. Thank you, Michael.
Thank you very much, Jane, and good morning all. And I can say after a month of intense work, literally day and night over the last few weeks, I'm incredibly excited and proud to announce Openpay's acquisition of Payment Assist, the leading buy now, pay later provider to the UK automotive sector. In my presentation today, I want to introduce Payment Assist and their business model and what makes them so valuable to our global strategy. And I want to emphasize the significant opportunity to create strong, sustainable shareholder value. So let's get started, Jane, on page 3. This deal really marks a milestone in the execution of our differentiated strategy in buy now, pay later, and not only for our UK business. So firstly, as you can see here, it literally catapults Openpay into the automotive vertical in the UK, making us a major player there, tripling our TTV and bringing a significant increase in all other important metrics. And Jussi will talk to them in a bit more detail. Growth is important, but this acquisition also underscores our focus on owning certain verticals, of which automotive is one. That makes this acquisition quite strategically important. Secondly, we do not only have massive growth opportunity in the underpenetrated 26 billion pounds UK auto sector. We also see very strong growth synergies between our two businesses within automotive, but also in other verticals. And all this with a company which we acquire now, which is growing strongly, has very low credit risk exposure, and is already cash positive. And thirdly, and really importantly, we tick the box of one of our major projects on our strategic agenda. Contingent on the regulator's approval of the change of control application, which we submit today, we will obtain the FCA's credit authorization. This is consistent with Openpay's responsible approach and strategy to enter the regulated credit market. Offering a fully authorized credit product going forward in all our markets, including the US going forward, clearly has the potential to become a competitive advantage versus our non-regulated peers in the pay in 4 space. Let's skip over to page 5. This slide is a brief reminder of Openpay's strongly differentiated approach, which builds on our flexible technical platform and our larger, longer, and customized buy now, pay smarter product. Many of our competitors, as you know, operate in the pay in 4 space, providing what is essentially cost-free short-term credit for t-shirts and tennis shoes in fast-moving retail. Openpay, and this is the differentiator, is positioned as the budgeting tool to use for life's more important purchases and experiences. You can use our plans across meaningful areas of your life: pets, medical treatments, your son's braces, your daughter's soccer club membership, dad's unexpectedly expensive car service, so welcome Payment Assist, mum's evening classes in accounting, and the refurbishment of the family's home. We are empowering finance-savvy people to be smart about their money and spread payments over a longer period of time. When we started comparing notes with Payment Assist's vision and approach, it became clear immediately that Payment Assist has been doing the same thing in the automotive vertical. We will talk more about this. Now back to our acquisition. On page 6, very briefly, Payment Assist is perfectly aligned from a positioning and product perspective to Openpay, and they make a great partner to grow with, particularly to accelerate growth in our specialized sectors. This, our first acquisition as a listed company, is the manifestation of our strategy to own specialized, meaningful verticals in all of our markets where we choose to operate. Assets like this enable and accelerate that strategy, And it's in these verticals where we can add value to both merchants, customers, and also partners. On page 7, thank you, Jane. When you browse here through the icons of these great brand names in the automotive industry, you understand what I called out in the beginning of my presentation. The acquisition literally catapults Openpay into the vertical of auto repair and maintenance in the UK. Over years, Payment Assist have developed a very significant merchant network, which spans from large global brands like what you see here, Renault, Hyundai, Honda, and others, to many high-profile independent garages like Formula One auto centers, or Who Can Fix My Car, and many, many more on the long tail of smaller ones. The natural symbiotic partnership and significant growth synergies between Openpay and Payment Assist are illustrated on page 8. We have hugely complementary, successful businesses built on our respective easy to integrate and easy to use budgeting tools with no interest or hidden catches, enjoyed by our customers and distinct from most competitors in the UK. Our flexible plans and strong customer bases are attractive to merchants and aggregators, and we can greatly leverage each other's complementary strength, including our geographic presence, the focus on verticals, and the financial performance which comes when you combine growth with profitability, what we do here. Over to page 9. There will be a significant leverage for Openpay from Payment Assist's broad and flexible set of longer term and high value payment solutions, their excellent merchant network, which provides them with access to 70% of the addressable auto market already, and their highly engaged finance-savvy customer base of 500,000, which of 170,000 having a plan with them as we speak. When we looked at this, it was one of those situations where 1 + 1 really did equal more than 2. So very exciting from a growth synergy perspective as well. I will now pass over to Jussi, who will explain the terms of the transaction in more detail and before highlight some of the implications on the group's P&L and funding. Over to you, Jussi.
Thank you, Michael, and good morning, everyone. Indeed, an exciting day for Openpay, our strategic partners and investors, as we announce our first acquisition into one of our key global specialized verticals in automotive, now also establishing our presence within the UK sector. And for me, throughout this entire process, it's become abundantly clear that not only is this acquisition a fantastic strategic and cultural fit between the two organizations, but that it really will also unlock significant shareholder value growth opportunities that we believe would be otherwise not exist. So what I will do today is really to outline the structure of the deal, including the major terms, as well as providing directional impacts of the transaction on our portfolio and related financials. So what I'll do, I'll start with outlining Payment Assist's performance to date and immediate targets. I will do that and then overlaying that with what this means to our UK region, as well as then finally to overall group portfolio and financials. So if we start on page 10, please, for an overview of Payment Assist. Thank you very much. So, and before I jump into the numbers, just to clarify that the figures on page 10 reflect Payment Assist's financial year, which actually runs from the 1st of January to the 31st of December. And when referring to revenue and net transaction margin, the organization at this stage accounts for revenues as and when collected. These will be adjusted for when the subsidiary gets consolidated into Openpay to be recognized on a deferred basis to ensure consistency of accounting. But looking at the numbers, we are very, very pleased that, about Payment Assist's performance with strong TTV growth at the high single-digit revenue margins in the 8s to 9s, as we want it to be, both with CAGRs in the 30s. So both TTV growth and revenue growth, strong 30+% CAGR growth, without also further compromising net transaction margin that has stayed above the 4% mark consistently. And whenever we present, we always mention that we want to have that, revenue margin at the high single to low double digit, and net transaction margin at least at the 2.5+ mark. So the 4% mark is very positive for us. And this will immediately have a positive impact within the region, where we today are only present in the retail. Good. So if we then skip to page 11, we can really note the transform profile of the UK portfolio to significantly grow its merchant footprint through the 4,500 strong automotive presence, with active customers nearing the 500,000 mark and active plans nearing the 1 million mark. Okay. And just in this case, please note that all of the data on this page is at a point in time, which in this case is on the 9th of June, so early June 2021 calendar year. And then if we go to page 12, please, we look at the combined TTV and revenue signature of the newly combined UK entity on a pro forma basis. And for this purpose, we've outlined the Payment Assist latest complete financial year being 2020, to which we add Openpay numbers for the same, or Openpay UK numbers for the same period, in other words, January to December 2020. Again, the region will really transform to generate roughly half or more than the group's TTV at strong revenue margins, with good funding headroom to grow the portfolio even more. Noting that the 55 million pound sterling committed funding facilities and additional 35 million uncommitted line that Openpay, the latter that Openpay UK has available to itself today. Then finally, if we look at page 13, thank you, we really outline the group impact of consolidating Payment Assist, both from portfolio metrics, again, as at the 9th of June this year, and TTV and revenue, similarly to the previous page where we overlay Openpay Global into Payment Assist financial year 2020. So this page talks in Aussie dollars where relevant. And if it's not at the point in time, it also looks at the January to December 2020 financial year, just to be clear. And pleasingly, we move more than double our active merchant base to well over 8,000. We start approaching the 1 million mark in active customers at over 700,000, and more than double active plans to over 2 million. TTV nears the 500 million mark in calendar year 2020 at 417. However, would comfortably exceed it, in 2021, as in exceed 500 million Australian dollars, all at strong revenue margins above the 8% mark. Okay, so that's in terms of the portfolio performance and pro forma consolidated basis. If we go to page 14 for deal structure and key terms. Thank you very much. So for 100% of the equity in Payment Assist, there will be two main components in consideration, as are set out there on page 14. The first one is the upfront consideration of 11.5 million pounds sterling, payable upon deal completion, with a cash component of 8.2 million pounds sterling and 3.3 million pounds sterling in Openpay scrip. And when I speak about deal completion, I actually mean when we get change of control request sign off from the Financial Conduct Authority in the UK, so the FCA. Then we have two earnout tranches of up to 5.5 million pounds sterling each, accessible at the end of December 22 and December 2023, respectively. So at the end of each calendar year for next year and the year thereafter. We have also agreed a possible incremental outperformance consideration amounting to a maximum of 6 million pounds sterling, given certain performance conditions being met, which means that a possible total consideration for the deal is at a maximum and capped amount of 28.5 million pounds sterling, with outperformance being assessed together with each earnout tranche. And all of those, the two earnout tranches being paid using a split of 60% cash and 40% as scrip, respectively. I think very importantly also, in terms of consideration, of the consideration assessment, we've aligned them according to Openpay's KPIs. And those are the KPIs that we very often talk about. So it's TTV, to ensure the growth focus that being maintained, net transaction margin for returns discipline, and profit before tax, maintaining the group's overall path to profitability very clear. Now, as I mentioned earlier, the remaining conditions of the transaction really just relate to receiving approval from the UK regulator, the FCA, as well as conditions on the founders of Payment Assist remaining with the group to run the subsidiary throughout this earn-out period. So those are the key portfolio metrics and financials on a pro forma basis when we will consolidate, as well as the key transaction metrics of the consideration structure. So with that, I will hand it over to you, Michael, to wrap up. So thank you very much. And Michael, over to you.
Thank you very much, UC. So what are the next steps? So let's skip over to page 15. Firstly, and obviously, we are very much looking forward to welcoming the Payment Assist team and their founders and leaders, Neil Jeffrey and Colin Allett, who are also very excited and committed to becoming part of the Openpay Group and who will continue with us on their successful journey. We will start to exploit these growth synergies, which we have outlined from the moment the FCA will approve the change of control application, which will be submitted today, now that the deal has been signed. So probably a few questions around how we will bring this out now all together, what it means also from a cost basis. Whilst Payment Assist will maintain their highly trusted and respected brand and operational strength, we see a near-term opportunity in marketing and end customer engagement. And what that means is we do not need to invest heavily, neither on our end nor on their end. We do not plan immediately to combine the two platforms into one. There's absolutely no need. Payment Assist's technical platform does exactly what a very good technical platform would need to do at POS in garages and car dealerships, really make it easy to integrate for the merchant and easy to use for the customer. So no further investment required there. And I think what leads to an immediate growth synergy is really taking our well-oiled marketing machine, which we have now practiced very, very successfully in retail in the UK over the last 2 years, to take this into the auto space and really cross-pollinate the customers on both sides to the respective other verticals. So a great opportunity there to grow without additional costs. What we'll also do is to explore the additional flexibility for new products in the regulated space based on the FCA credit authorization when approved in a few months' time. And I think from a debt funding perspective, there's also very good news, as their strongly engaged funding partner is committed to continuing to support them on a continuous basis. So I think from that perspective, really the opportunity to grow and leverage on opportunities now without further cost. So to wrap up on page 16, thank you, Jane. The acquisition of Payment Assist marks a huge milestone for Openpay. We are entering the automotive vertical at pace and scale in the UK with the market leader, who also has a huge amount of untapped growth potential in a £26 billion auto market, as mentioned before. In a deal that fundamentally improves the commercial profile of both our UK and global business. And we are now pivoting as a group towards our areas of strong differentiation, and we are just getting started. As you know, as we have announced before, we will launch into the US healthcare space in a few months' time. And this probably represents an even bigger quantum leap opportunity for our business. These moves add up to provide the market with clarity on who we are and what to expect from us. We are focused and energized about the opportunity to lead in our areas of strength. From a global strategic perspective, this transaction is an important stepping stone for Openpay to become a leader in its chosen verticals, primed for these longer, larger and customized payment plans with the best-in-class revenue yield. And from that perspective, also Payment Assist fits very, very nicely with their revenue yield of 8% and more. Importantly, and in keeping with our global strategy, the automotive segment brings a significantly lower exposure to credit and fraud risk than in fast-moving small ticket retail. Also, this is very value accretive. And this will be demonstrated at the next level of scale when we kick off in the US healthcare market, as mentioned before, with EasyVet in the second half of this calendar year. So overall, we look very much forward to keeping you and our investors updated on our progress. So thank you for joining in this morning. And with this, we will now enter the Q&A part of the call, moderated by Jane. Over to you. Thanks, Jane.
Okay, so perhaps we can start with one, Michael, on the sector itself. Obviously, Openpay has been in automotive in Australia for a while, but just talk to the rationale around why the automotive sector in the UK looks like a good place to be.
Yeah, thanks, Jane. Really based on our global strategy to own these verticals where we have a distinct value proposition, we obviously looked at what makes us most successful in our home market in Australia, and looking at automotive, but also healthcare. These are really the verticals where we see a very, very strong opportunity to differentiate for the merchant, to present our product for their services in the flexible way we do it, with longer and larger and customized plans, but also for the customer for meaningful investments into their lifestyle and being smart about spreading out the payments. So from that perspective, automotive is really at the core of our strategy globally. And looking at the metrics, from a growth potential in a largely untapped market now in the UK as well. I mentioned the 26 billion pounds, but then also the growth which Payment Assist have demonstrated, which is very consistent with our growth in automotive in Australia. And then looking at the P&L, high revenue yield, which we really like, very low exposure to risk, and then writing profit. This is so much at the core of what we want to be famous for globally. And when we then kind of looked in the UK market above and beyond our organic growth, what we find in the market from an inorganic acceleration perspective into our verticals, this was a no-brainer to really look at them in more detail, reach out, and we liked each other really from day one. It clicked, and this is why this that the kind of time to execute of this deal has been so short. So really a very exciting story for us and for them.
Right, and just a related question to that was, what was your process to determine that Payment Assist was a good business to buy? Yeah,
again, we looked and we continue to grow very strongly organically, and also based now on global partnerships like FIS, WorldPay, and other aggregators, which will accelerate growth for us based on our own platform. But we really looked also increasingly in these verticals for who is around in the market, first of all, from a competitive perspective, but then it crystallized that this Payment Assist in auto is really a partner of choice. And we did all the hard work. We did a very extensive due diligence process with them. We did valuations back and forth based on multiples, based on DCF, to really get it right from a fair value perspective, also to ensure that our shareholders get the best value of what that can be, what it is today, and what it will be as we exploit growth synergies. So this is how we got to Payment Assist and ultimately to the deal.
Thank you. Perhaps one for Jussi now. Do you need to invest a lot more into the UK from an OPEX perspective to make this deal work?
Thank you, Jane. And the short answer is no, not much at all. Both organizations are operating, pretty well. And if you think Payment Assist has been founded in 2013, and a lot of the first initial years is really to get it up to speed and doing a lot of the investment. And where we really saw the attraction was that they are now at this kind of inflection point where they see a lot of operating leverage so that they can really grow that volume and TTV and build on their bottom line. So they are net profit after tax profitable as well as on a cash flow basis, which is very attractive for us. And, if you look at the revenue margin that's in the 8s, goes down to 4%, they have good operating leverage and good, highly effective and efficient operations that they can now really scale up and grow. So we don't expect a significant amount of investment, but also in some forms, the targets and KPIs that we have for the earnout consideration reflect that as well. So if we do invest some, and the target at the bottom line still stay the same, so they need to compensate on the top line as well to mitigate that for that. So there is protection for shareholder value creation there too.
Thanks, Yusi. Okay, so perhaps one for Michael. This is your first acquisition since being listed. Do you expect that there will be more in the future, and how much of your growth strategy could we expect M&A to make up?
That's a good question as well. Obviously, we continue to explore different avenues to grow and scale our business across geographies. And I think we have proven very, very solid growth in our home market and in our first international market. So we have proven capability to lift and shift our platform and product into new markets and really win. What we have seen in the UK in bigger ticket retail and what we will see in the US very soon. But again, this is, if I look at the broader sector and the pace of change, this is a race, and we have the ambition to play on global level and to own verticals where we can make this true difference to merchants, customers, and our partners and create shareholder value. So we will continue to explore the avenue of inorganic growth. And from that perspective, I expect both organic and inorganic contributing strongly to our profile going forward globally.
Okay, thank you. So a question here just on branding of Payment Assist. So why aren't you planning on rebranding the company?
It would be wasting resources and money, to be very, very honest. Payment Assist have built over years a fantastic reputation in the auto market and beyond. You have seen the names of who entrust them to provide their garages and their customers with the best possible service. And from that perspective, we will keep the Payment Assist brand going and growing, and probably add kind of part of the Openpay Group to articulate that this is now a bigger entity with more to come. But there's absolutely no reason why we should change this. And it has worked very well in the past and will continue to work in the future in this kind of combined setting, but with their brand in auto.
Okay, so there was obviously a small note on the US in today's announcement as well. So the question here is, when do you expect to provide a next update on the US expansion, and how is that traveling?
That's actually a very, very topical question, as we have already prepared for the imminent update of the investor base in Australia, Europe, and the US on our progress in the US market. So this is due post 4th of July, probably the week after, but we will come back with a comprehensive update on how we travel in executing on the 6 pillars of success, which Brian Schneiderman has outlined, and more to come at that time in less than 2 weeks.
Okay, great. Okay, and so question here on the deal mechanics. When do you expect to have to pay the upfronts for the Payment Assist acquisition?
Yeah, this will only happen when the FCA have approved a change of control application, which we have submitted today. And this will typically take a few months for them to go through the formal process, and only then, when it's finally confirmed by the FCA, probably late September, October, then the initial consideration would be paid both cash and scrip.
Thank you. So a question here for Yusi, just with regards to adding Payment Assist into the business. So how much do you expect to see adding Payment Assist in to affect your ongoing quarterly cash position?
Well, Payment Assist today is cash flow positive, and as mentioned as well, bottom line, so net profit after tax profitable as well. So what we will do is clearly, as and when the completion date is achieved, from that point onwards, we are obliged to consolidate the results of the company and balance sheet to begin with, and we will start reporting the cash flows, which Payment Assist will only increase going forward at a growing rate through the 4C process on a quarterly basis at least.
Okay, thank you. And another question on procedural matters. So will shareholders need to vote to approve this transaction? We've already spoken about the FCA authorization process. Perhaps one for you, Michael.
Purely for the scrip-related earnout payments, as and when they are payable.
Yeah,
so as at the end. Yeah.
And to add, for the initial scrip, for the upfront, shareholders would not need to approve, because we have the kind of the space to do this with existing capacity. But then, as you see rightly says, for the scrip consideration at the end of 22 and 23, which then informs tranche 2 and 3 of cash and scrip, then there would be shareholder approval required.
Remembering calendar year.
Calendar year, right.
Okay, terrific. And question here, Michael, on the share price. Just wondering if you might make a comment on the current trading levels of the share price, which are a bit down.
Yeah, we have seen over the last period disappointing kind of share price development across the sector, and particularly also on our end. Again, and I said this before, what we own and where we own our own destiny is really growing our business and feeding the market with exciting news about the growth. And we have now, for the first time, added an inorganic growth opportunity with the buy now, pay later leader in the UK automotive market to our existing growth story. And I think that's really, really fantastic. And it, I think, for investors opens up more the mind who we really will be as we now pivot more towards our verticals where we can lead the market and own them. So I think from that perspective, this is not only a deal and adding some good numbers. This, I think, will also provide the market with more clarity who we are. And we have more really good news in the pipeline, which we've been working towards over the last period. So my expectation is a good performance first, and then the share price will follow. And from that perspective, I'm very, very positive about this part of our business going forward.
Thank you. Okay, so we're getting close to our time with questions. Maybe we'll just run through one or two more. So perhaps, Michael, a question here in case it was missed. How much of an impact do you expect, or perhaps for you see, bringing Payment Assist into the group will have on your financials?
Look, I mean, as mentioned before, it will be significantly positive. I mean, what we outlined on some of those pages in terms of, for example, TTV, UK region, and Payment Assist almost by itself will start to be at the half global mark, or slightly even more. So from a portfolio perspective, it's very strong. The other KPI that we pay particular attention to is the net transaction margin. And if you listen to our investor presentations, we always say that our objectives are 2.5% and above net transaction margin, and high single digit from a revenue perspective. So this definitely hits the mark, and will strengthen the bottom line there. Clearly, the fact that Payment Assist is profitable on a net after-tax basis is very positive for us. But what we still do is make sure that we absolutely incentivize Openpay Group and Payment Assist to really strongly grow volumes and the portfolio much more from where it is today. And that is really where we saw that attraction in this acquisition, that together we can absolutely unlock a lot more shareholder value than what we could achieve if we were to follow this strategy by ourselves unilaterally. So we have a lot of opportunities on the table that we will now start delivering.
Terrific, thank you. Okay, and we might just make this the last one for you, Michael. So it's about FCA licensing. So what's the significance of Payment Assist having an FCA license?
I think it's significant for them. We have seen in the presentation today, we didn't talk about this that much, but they also apply their credit license product in professional service, kind of legal and accounting service, where they service the market with plans from 12 to 48 months, and typically transaction values of individual kind of advice in tax and accounting of £2,000-3,000 sterling. And I think they have discovered this early opportunity in the regulated space, which we will look into and I think consider going forward also how we can expand that part of the business, which will come with the FCA credit authorization once we have received the approval. So from that perspective, I think it just opens up for us the opportunity based on that license to extend our payment plans for more than a year, and also to be flexible with regard to charging customers a fee what we can't currently based on having a non-credit license product in the UK. So from that perspective, growth into adjacent opportunities, top line growth, but also contributing to strong revenue yield and profitability is what this FCA credit authorization means. And we are in a time of rapid change also when it comes to regulatory regimes. And we all know that the FCA currently with their rule-out review look into the regulation of the UK market. Whatever will happen, we will have the credit license. We will probably have the most responsible product in the market equipped with the license. And I think this from the outset will be a competitive advantage vis-a-vis many of our competitors who are very far from that. And so a very, very important step for us and tick strategically with this authorization.
Excellent. Well, that's a good note to end on. So with that, I might pass back to you, Michael, for concluding comments.
Yeah, thanks, Jane, and thanks everyone for attending the call this morning. As I said, and as we said and try to explain, this is not only an incremental step, this is a step change for us, transformational for the company, and not only in the UK, but really at global scale. And going forward, and I think we will contribute with very clear messaging into the market with more news. This is the strategy which we pursue globally to own verticals where we can make a true difference for customers, merchants, and aggregation partners to scale more quickly and to make this a leading global business. So we are very, very excited about the deal today, and there's more to come. And stay tuned, and thank you very much for your support.